today's topic, I want to teach you on how to do a break and retest strategy. Okay, so if the market is in an uptrend, most of the time it moves to make higher highs, higher lows, higher highs, higher lows, higher highs, higher lows until further. Okay, so what we usually look for are these zones. Okay, the higher high zones be broken, come back to be retested. Then when certain candlestick patterns are formed at this retest to confirm the continuation to the upside, we can jump on this trade. Okay, so it's the same here. When the market breaks that zone, comes back to retest, certain candlestick patterns form, then we can join in on the continuation of that trade. Okay, it is better to jump on the train than jump on in front of a train. Reason why I say that, because most traders always hope for trend reversals, trying to look for double tops, double bottoms, so that they can get on a big trend to the downside. But what I always say is only enter buys if the market is going to the upside, only enter sells if the market is going to the downside. And how do you confirm that the market has turned to the downside? So it usually prints something like this. So this is a level here, and this level continuation. Okay, so it will print something like this, come down, come up, break this zone, retest it, then continue to the downside. For most people, they would say this is what we call a head and shoulders type of pattern. Okay, only then can you say the market has reversed if it starts to break its higher highs and start to form higher lower lows, lower highs and lower lows. Okay, going to the downside. So currently we are on the daily time frame. Okay, this sort of thing happens either on any time frame, either the daily, the 1 hour, but usually we start with the daily because that's where the trend matters the most on a higher time frame, sort of, because you have to understand to say what is the market doing on a higher time frame that I can utilize on a smaller time frame for me to capitalize on the moves that I'm making. Okay, so once you recognize that the market is at a certain zone, you will understand to say, okay, at this zone we're waiting for the market to print certain candlestick for us to jump in on a continuation buy. Okay, so for example, the market came here, came down, broke this zone, came to retested. This zone was broken, came to be retested. The zone was broken, came to be retested. Just like that, it continues to make higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So once you have this understanding in mind, you always understand where the market is and what the market is doing. Okay, so this, for example, this whole move to the downside, if we drop down to a smaller time frame, it was a downtrend. Okay, then this whole move to the upside was an uptrend. This one drop again, downtrend, just like that. This whole move uptrend, this one retracement, downtrend. Okay, if you drop down on a smaller time frame. So once you have that understanding, you will be able to utilize to say, to know, okay, the market is forming a downtrend on a lower time frame because why? It is on a retracement on a higher time frame. Okay, so that's how you capitalize on this trading idea. So if you drop down, let's drop down to 1 hour for you to understand this concept even further. Okay, because this is on a daily, so let's just go back. Where is it? I think we're lost now. Okay, there. Okay, so you understand what I was talking about. Okay, so the market started, okay, we'll just use this same zone. Okay, So on a smaller time frame, on a 1 hour, you can even recognize these high highs, high lows, high highs, high lows, high highs, just like that. Okay, so once it reaches a zone, you have to wait for certain candlestick patterns to form for you to do a continuation buy. So for example, this whole move on a daily, it might have been just probably 3 candles, but on a smaller time frame, on a 1 hour, it's a whole downtrend here. When the market reaches the back at the level, it continues to the upside. So how do you capitalize on this? When the market is at this zone, you look for continuation candlestick. It has to start. So you've seen it was forming lower lows, lower highs, lower lows, lower highs, lower lows, moves up but came down again. Now started making high highs, higher lows, high highs, higher low, high high, higher low, high high, higher low, just like that. You've seen. So that's how you trade a continuation strategy. Okay, so it's easy to understand. Reason being, once you know what the market is doing on a higher time frame, when you drop down to a smaller time frame, you will understand to say, okay, at the current moment the market is trending up, but this trend down is only a retracement on a higher time frame. Okay, so that you don't get lost to say whenever you drop down to a smaller time frame, you're seeing the market is trending down, but initially on the daily it's on a down trend. Okay, so all this break, come back to retest, and you always have to look for certain candlesticks. You see weak rejection, continuation candle, you could have entered the buy to the upside. Okay, so this is a 1 hour time frame. Imagine if you bought here, all this move you could have capitalized to the upside. Okay, when it reaches this zone, came back to retest and broke the zone again, retested, just like that. That's how the market continues until it fails to make a new higher high and continues down below to start making lower lows. Okay, so these zones, always look out for them. They do happen every now and then. So once you map out everything, you'll be able to understand exactly what the market is doing. Okay, so that is a small topic that I can discuss. So for example, here this zone came, rejected it, weak rejection, momentum. You could have entered your sell trade possibly here. Okay, stop loss above these wicks, take profit to the next zone here. Okay, so that's how you can utilize these sort of movements. Okay, it's the same thing with the buy. Okay, came here, momentum has reduced. You could have entered in on a buy trade immediately after the momentum has built in, stop loss below the zone, take profit. You could have even gone beyond the zone because you know on a higher time frame it's in an uptrend. Okay, so that means this zone will be broken up until some level here. Okay, so again here, when the market came back to retest, bullish engulfing candle, you could have entered your buy trade. You enter another buy here, stop loss just below, take profit all the way up there. Okay, small drawdown, but still the market continues. That's how you utilize zones on a higher time frame. You trade them on a smaller time frame. When you drop down even lower to the 5 minute, you can even have sniper entries, because why? On a smaller time frame, you even notice to say, okay, the market was making lower lows, lower highs, lower lows. Now it has switched, it started making high highs, higher lows, higher highs. Then you enter your sniper entries, your stop loss will be closed, then you take profit. So okay, so you can do this every day, because once you understand what the market is doing, you'll be able to trade without problems.